Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for Now Explain Rough Cut. So now, let's get explaining. What are ledgers in bookkeeping? What is a ledger and why we use them in bookkeeping? What you need to be familiar with: source documents, sales invoice daybook, sales credit note daybook, bank receipts daybook, purchase invoice daybook, the purchase credit note daybook, the bank payments daybook, and the petty cash daybook, and the general journal daybook. The daybooks will be used to supply data to prepare ledgers, the ledger cards. Other terminology you should understand: T accounts and debits and credits. What are ledger cards? A ledger card is used to record all the transactions related to one type of an account. That could be a customer account, a supplier account, or a type of income or expense account. The transactions are taken from the daybooks and entered or posted to a ledger card. The total of each analysis column in a daybook will be recorded on, that is, posted to, a ledger card. Here's the sales daybook. And if we see here the column analysis descriptions, these will be used in the general ledger. And here's a line item posted to a customer's ledger card. Overall totals posted to the general ledger are shown here at the bottom. All ledger cards are set up in the standard T account layout. The shape looks like the letter T, with debit values on the left hand side and credit values on the right hand side. The customer ledger card accumulates information from the sales invoice daybook, the sales credit note daybook, and the bank receipts daybook. The line value in the total column for each transaction in the sales invoice daybook and sales credit note daybook and customer column in the bank receipts daybook is recorded in the customer's ledger card. The customer ledger card can be used to see how much each individual customer owes your business. It will list all the sales invoices, sales credit notes, and monies received from a single customer. There is one ledger card per customer. The supplier ledger card accumulates information from the purchase invoice daybook, the purchase credit note daybook, and the bank payments daybook. The line value in the total column for each transaction in the purchase invoice daybook and purchase credit note daybook and supplier column in the bank payments daybook is recorded in the supplier's ledger card. The supplier ledger card can be used to see how much your business owes to each individual supplier. It will list all the purchase invoices, purchase credit notes, and payments to a single supplier. There is one ledger card per supplier. What is a general ledger? The general ledger card accumulates information from all the daybooks. The general ledger's purpose is to allow the 5 main account types, assets, liabilities, income, expense, and capital values to be calculated. This is done by creating ledger accounts that allow you to record and analyse each transaction from the daybooks onto a ledger card. The overall total, usually the monthly total of each analysis column in each of the daybooks, are recorded on a general ledger card. For example, in the purchase invoice daybook, the analysis columns of stationery will have its own general ledger card. You will be able to see what makes up the expenditure for stationery. The ledger card will indicate which daybooks the transactions came from and allow you to trace back the values to the relevant daybook and the original source documents. So in this case, PI1 is the purchase invoice daybook page 1. The details are stationery column of the purchase invoice daybook. PT1, petty cash stationery, from the petty cash daybook page 1, details stationery column of the petty cash daybook. The total amount spent on stationery is then shown at the end. Summary of ledger cards. The customer ledger card can be used to see how much each individual customer owes your business. It will list all the sales invoices, sales credit notes, and monies received for a single customer. There is one ledger card per customer. The supplier ledger card can be used to see how much each individual supplier is owed by your business. It will list all the purchase invoices, purchase credit notes, and monies paid out for a single supplier. There is one ledger card per supplier. The general ledger cards list all the income, expenditure, assets, and liability values in an organised format, with one card per analysis type. The values, the balances on each card can then be listed and analysed. The general ledger balances, the values, can then be used to generate the financial statements. This has been an introduction to the ledger in bookkeeping and why and where ledgers are used in bookkeeping. We learned about customer ledger cards, supplier ledger cards, general ledger cards, debits and credits, and the T account layout. For more information, go to nowexplained.com. Thank you for watching.